Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mmg Limited annual report. Mmg Limited is a diversified mining company that operates globally through various segments. At the core of its business are the exploration, development, and mining of mineral properties. The company's portfolio includes copper, zinc, gold, silver, molybdenum, cobalt, and lead deposits. The company's operations span across several countries, including Peru, Australia, Botswana, and the Democratic Republic of Congo. Its segments include Las Bambas, Kinsevere, Khoemacau, Dugald River, and Rosebery, each contributing to its diverse mining activities. In summary, Mmg Limited provides a range of businesses and services, including exploration and development of mineral properties, mining operations for various minerals such as copper, zinc, gold, silver, molybdenum, cobalt, and lead operations in multiple countries across the globe. These services are provided through its various segments, which cater to different aspects of the mining industry. The stock price of Mmg Limited has skyrocketed by 297.1% in the past year due to several key news events that showcase the company's strong operational performance and favorable market conditions. One major factor was the robust production growth across various metal assets, with copper and zinc output increasing by 28% and 6%, respectively. This was followed by record-breaking financial results for 2025, with revenue rising by 38.8% to $6.218 billion, and net profit surging by 214.6% to $509 million. The company's expansion plans also contributed to the surge in stock price. In December 2025, Mmg approved a $900 million expansion of its Khoemacau copper mine in Botswana, which is expected to increase annual production capacity to 130,000 tons of copper by 2028. Additionally, the company's balance sheet strengthened with reduced net debt and a record-low gearing ratio of 33%. Analysts also revised their price target for Mmg, increasing it by 173.19% to $1.32 per share. The anticipation of sustained high commodity prices further boosted investor confidence in Mmg Limited. The company's expectation that record-high gold and silver prices will bolster its financial performance has contributed to the surge in stock price. Overall, the combination of strong operational execution, record financial achievements, strategic expansion, and a positive outlook for commodity prices have significantly contributed to the soaring stock price of Mmg Limited over the past year. Mmg Limited market capitalization of $116 billion is significantly larger than the average industry peer of roughly $6 billion. This shows that Mmg Limited holds a significant advantage in their industry. Mmg Limited trades at a higher price-to-earnings ratio of 30 times and a higher price-to-book ratio of 3.74 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for Mmg are multifaceted. Firstly, the company has experienced higher production across key metals such as copper, zinc, gold, and silver, resulting in significant increases in revenue. Favorable market prices for these metals have also contributed to revenue growth. The Las Bambas mine has been a major contributor to revenue growth, with a 49% year-on-year increase. In addition to production and price factors, MMG's disciplined operational performance and financial management have enabled the company to optimize its costs and maximize revenue. The growing demand for MMG's minerals in the energy transition and low-carbon economy is also expected to support revenue growth. Furthermore, the expansion of the Khoemacau copper mine and exploration success, leading to increases in mineral resources and ore reserves, are expected to drive future revenue growth. On the other hand, the primary drivers of revenue decline for MMG include lower production levels at certain mines, such as Rosebery, which experienced a 14% year-on-year decrease in zinc production. Lower sales volumes for zinc, lead, copper, and precious metals have also contributed to revenue decline. The decline in molybdenum sales volumes at Las Bambas and cobalt sales volumes at Kinsevere are other factors that have impacted revenue. Overall, MMG's revenue growth is driven by a combination of production, price, and operational factors, while revenue decline is primarily due to lower production levels and sales volumes. The net income of the company experienced a significant increase in 2024 compared to the previous year. The net income rose by $589.2 million, from $366 million to $955.2 million. Furthermore, the attributable profit for equity holders also saw an increase of $347.5 million, rising from $161.9 million to $509.4 million. The company's profit margins also witnessed a substantial growth in 2024. The EBITDA, earnings before interest, taxes, depreciation, and amortization, rose by 67% year-on-year to reach a record high of $3,412.1 million. Additionally, the EBIT, earnings before interest and taxes, surged by 102% year-on-year to achieve a new record of $1,999.1 million. These remarkable increases in profit margins can be attributed to various factors such as improved operational efficiency, increased revenue, or strategic business decisions made by the company's management. The company's financial performance has shown significant improvement in terms of generating positive operating cash flow. A notable achievement is the record net operating cash flows of $1,689.5 million, which represents a substantial 67% increase from the previous year. This upward trend is consistently reflected across multiple pages, underscoring the company's ability to generate robust cash inflows from its operations. The company's debt level has undergone significant changes over the past period. Initially, total borrowings decreased from $4,635.1 million to $3,278.9 million on page 22. This trend continued with a further decrease in debt level from $4,554.8 million to $3,544.9 million on pages 32 and 35. External borrowings also saw a substantial decline from $3,677.1 million to $1,860 million on page 49. Furthermore, total debt decreased from $4,628.8 million to $3,275.1 million on page 70. The decrease in debt level has had a corresponding impact on interest expenses. Interest expenses have been reduced from $21.5 million to $18.1 million due to variable interest rate borrowings on page 31. Finance costs also decreased from $449.8 million to $289.5 million on page 58. Additionally, the weighted average effective interest rate has dropped from 5.5% to 5.1%, leading to a decrease in interest expenses on page 70. The effective interest rate for the liability component was recorded at 4.72% on page 71. Overall, both debt level and interest expenses have decreased significantly, indicating a positive trend for the company's financial health. The performance of various segments and regions in the industry has been mixed. On a positive note, CMN, Asia, Las Kinsevere, Rosebery, Dugald River, and Khoemacau have shown strong performances. These regions have demonstrated their ability to meet expectations and contribute positively to the overall results. On the other hand, some segments and regions have underperformed. CITIC Metal and Trafigura have struggled, while Europe has also seen a decline in performance. Kinsevere has experienced an impairment of assets, which has negatively impacted its performance. The unallocated segment in the U.S. has also performed poorly. These areas require attention to improve their performance and contribute positively to the overall results. Management is optimistic about the company's outlook, citing a significant increase in revenue due to higher sales volumes and prices. This growth is expected to continue with the implementation of the Khoemacau expansion project, which aims to boost copper production while reducing costs and extending mine life. The project's objectives are multifaceted, demonstrating management's commitment to long-term sustainability. By increasing production capacity, the company can capitalize on growing demand for copper, a crucial metal in various industries. Additionally, the project's focus on cost reduction will help maintain profitability even as production levels rise. Management has also identified further expansion potential of up to 200,000 tons of copper, with a pre-feasibility study scheduled for 2026. This suggests that the company is planning for future growth and is committed to exploring opportunities to increase its production capacity. Overall, management's strategy appears to be centered on sustainable growth, cost efficiency, and long-term profitability. The company has made several strategic acquisitions and divestitures to enhance its operations and growth prospects. In terms of acquisitions, the company has purchased Nickel Brazil from Anglo American plc, expanding its presence in the nickel business in Brazil. Additionally, it has acquired expansion potential at the Khoemacau copper mine in Botswana, which is expected to increase copper production by up to 200,000 tons per annum. The company also acquired Mmg's Khoemacau mine in March 2024, further solidifying its position in the copper market. Furthermore, it has acquired the Las Bambas mine in 2014, although specific details of this acquisition are not provided. On the other hand, the company has made some divestitures to streamline its operations and focus on core businesses. One notable example is the sale of the MLB JV, although no further details about this transaction are available. The company has a history of paying out significant amounts to its stakeholders. In 2025, it paid dividends totaling $695.3 million to non-controlling interests of the Las Bambas joint venture. This demonstrates the company's commitment to rewarding its investors and partners. On the other hand, there is no relevant information provided regarding share buybacks. The company has not engaged in any significant share repurchase activities, suggesting that it prefers to allocate its resources towards other strategic initiatives. The recent market trends have raised concerns about inventory buildup in the industry. A significant decrease in sales volume of certain metals, such as molybdenum 22%, cobalt 70%, and lead 20% in 2025 compared to 2024 has contributed to this issue. Furthermore, the costs capitalized as part of inventory have increased by $116.6 million due to the accumulation of ore stocks and copper concentrate. This buildup of inventory is also evident in the stockpiling of ore, zinc, and lead concentrate, valued at $12.3 million. The lower sales volumes for various metals in 2025 have exacerbated this problem, indicating a potential mismatch between supply and demand. As a result, there are concerns about inventory buildup, but no indications of supply chain disruption. That concludes the financial summary for Mmg Limited. Feel free to comment below, and I will be happy to answer them when possible.